So next week it could be ending down here, sub 20. Finally, right? Finally sub 20 probably. So on January 8th, I said that we also could see the end of the downside in the last trading week, but I don't think that's true anymore. Really quick, I want to start with my trend line analysis study. You can see this big bold red line here is drawn from this last minor high to touch these minor highs as well. And you can see there's two perfect touches there and there. So this would be our downtrend, the prevailing trend. These dashed lines are waves in that downward move. So we had a vertical run down and then it was intercepted by this corrective phase, this corrective wave. And when it ends, we see the next run start. And this is a pretty reliable way to understand which way the price is trending. So you can see that we're in a big red phase. We did have a corrective wave here, but because of this new low, all right, this trend, this is a new trend, but it's looking like a continuation. You can just see the measured moves down that are nested in here. You have 1 here, 2, 3. And you can see that the first leg is shown in red. The second wave is the corrective phase, and that third wave, that down, that's the second leg. So 1 leg, 2, and 3. And then we had another big corrective phase, right? And it was seemingly twice as long as normal. We only have 1 red downtrend here coming down from the top of that corrective phase, only to form a less steep trend, but still corrective before a big dump. I think that this double corrective wave is because this pattern is larger and is actually nesting that first measured move down. That this whole move is 1 and this big move is 2, and we're about to see 3. So that's what I believe. So you got 1, 2, and 1, and I guess this is 2. I don't know. It looks like we're still missing one more big dump in the second leg. And that would take us down to, yeah, $7. If it played out 100%, theoretically, $7. And I've shown that trend too, that shows that. This gray line, I've been using it to just run the trend through different points where the corrective phase breaks down. So the corrective phase here breaks down, right? And if I draw this trend, you can see the price is more or less just following that trend line. Like this seems to be the internal trend line. And I can move it around and have it so that it, wherever the corrective phase ends, I come through it, and it makes pretty good sense. So I'm just gonna take it from this point and move it down. And you can see the price is stair-stepping right now. Maybe a few sideways days before the next big dump, but it's not looking good. And there's some chart patterns too that would support this as well. Let's start with this guy right here. We have a descending triangle, and you can see that the price has closed below it and outside of it after wicking up into it. So I have some statistics pulled up on the right, and you'll see that Bulkowski gives this a 58% chance for a pullback. And I think we've already seen that attempt for pullback because of this wick. Doesn't mean the price couldn't move higher though. It really could. In fact, it wouldn't surprise me to see the price rise to the top of this triangle at least one more time. And I say that because typically we have more touch points and the breakouts happen about 70% through the entire width of the pattern. So we still have a ways to go there. And it just doesn't cross the pattern enough times yet, but it is there. It is well formed, so it could break down still. A bullish bounce would be unlikely, I think, in the face of Omicron, in the face of the potential Russian invasion of Ukraine, and the reality of runaway inflation. So I'm thinking overall the market's going to be down. That weight is going to not bode well for AMC. So I'm expecting the breakdown to continue. Maybe some sideways days before we see this next big step down to finish these nested measured moves down. There seem to be 3 of them. One, a big one, and then this third one is just playing out. We're about to see its second leg. And the target for this descending triangle is $14.24. Very low. The open interest for next week's expiration on the options chain is $15. That's where I see the most open interest on puts. So just like these other two red dots here, I'm gonna put another dot down and just see if that's where the price ends up. It's worked for 2 weeks in a row, so let's see. You know, if it can do that for 3 weeks in a row, that's crazy. Nonetheless, okay, I'm bearish on AMC. So this week, I did make money, but I also lost a lot of money. I made one really bad trade, and I lost 41% of my portfolio in that one trade. And that was a very stinging learning experience. And so what I did is, went back to the basics. What's this book? My mic's sitting on this book right now. But it's Evolution of a Trader, Trading Basics by Thomas Bulkowski. And I went through, and I'm going to start following his trading advice a lot better. I'm not a very good trader. My analysis is great, right? But my trading needs a lot of work. So that involves putting together a core portfolio of stocks and then my day trading stocks and kind of taking more than one approach. And I've been day trading a lot. I need to position trade, hold positions for longer, and I'm working on this list. I want to go over one of these stocks that I've picked for my core portfolio, Genprex. Wow, let me pull up the max. I feel like whenever I'm picking a new stock, I have to see the maximum amount of time. I need to see all of the trends, understand where the price is relative to its history. So Genprex was once trading much higher in the mid-teens. Big measure move down. Look at that. 1, 2, 3. Whew, that's nuts. Like, boom, big boom up and a nice consolidation pattern here, right? And it just seems to have extended that before breaking down. So what I'm looking for in Genprex is a bottoming pattern. Look at this wick. Isn't that interesting? Wouldn't you like to know what that was? Because that move broke through, but was a false breakout, this downtrend. I'm looking for the end of this downtrend, and this big move up, this is a good sign that maybe we're going to see the end of that. So I'm going to zoom us in to the daily, and when I'm done with the technicals here, I do want to talk about Genprex as a company. Yeah, wow, look at this. Boom! Look at that green candle. That is huge. I love it. Why'd that happen? I have the Yahoo article pulled up right here. Covers what happened in Genprex that week. Scroll up. Genprex announced that the FDA has granted a fast-track designation to its lead product candidate, Recorsa Immunogene Therapy. Immunogene Therapy, guys. I'm into it. I like it. I remember seeing a documentary on Netflix about it once, and it's just like a bunch of people in their backyards and sheds, like doing experiments on dogs and stuff. It's like super messed up, like mad scientist things, but the prospects of gene therapy are huge. I'm into it. So I see this big news. They got fast track. I go onto their website, and they have a whole presentation on their website about their different cancer and diabetes treatments. Forward-looking statements at a glance. They're going to be a leader in the next wave of medical advancement, I think, right? For systemic gene therapy used for cancer in humans. This is big stuff. So we can go ahead and look at what they're doing currently. They have several projects. 2 of them have FDA fast track approval, and that news of fast track was actually what sent the stock soaring. All right, so yeah, you can see Genprex on this chart compared to the industry and how it was at the stock price was underperforming, seemingly forming a big bottom here and then big explosion up, which I like to see. That's very attractive to me. So the fast track designation is designed to facilitate the development and acceleration of the review of drugs to treat serious conditions and fill an unmet medical need or offer a potential advantage over existing treatments. There is a lot of lung cancer in the United States, right? 131,000 deaths from the disease in 2021. So if successfully developed and upon potential approval, Recorsa might be able to tap into a market with significant potential while treating patients with late-stage non-small cell lung cancer, besides driving growth for Genprex. So I'm bullish on Genprex. It sounds like they're getting some new drugs. They're going to go into phase 3 clinical, and I think in the next quarter we can expect to hear some more progress. I think long term this company could do very, very well. So I'm in a buy and hold right now on Genprex. Gonna close that up. And let's take a look here, a little more detail about what this looks like. I mean, this looks really good to me. I look at this and I just smile. This is the prevailing downtrend at the moment. Maybe I make it a solid line so that's a little more clear. You can see that the price did test it, bounce, fall through it, and now it seems to be spinning along this downtrend. I expect to see a strong move either direction once it's made. And I think I'm looking at a developing double bottom. Now, it hasn't double bottomed yet. You can see there's this nice shelf right here after that decline. That would be the first bottom. This would be an eve bottom. And then we have our intermediate high. And now we see this nice rounding bottom as well. So if the price can pass above this last high, then we'll have a double bottom confirmed, a very, very tall double bottom, and that'd be great. I think though, for the moment, what else we can see is a triangle forming up, right? You can just see this. There'd be 2 touch points there, and then we've got plenty of touch points here, and you got a descending triangle. The price recently finding near that low and then bouncing up and heading upwards. I think that would be another legitimate way to view this. I don't know if the pattern's old enough. I don't think it's been 3 weeks, so it couldn't be a triangle. We'd have to analyze it like a pennant, but nonetheless, I digress, because what I really want to talk about is this triple bottom in here, which is pretty cool. And I unfortunately did not buy this triple bottom in time to make money from it, but yeah, you can see this pennant form, and then the price bounces 3 times. And Bulkowski says during a triple bottom, if you're an aggressive investor and you have a peak that's higher than the most recent peak after this triple bottom forms up, that you can draw this trend line and then buy as soon as that breakout occurs. And that would have been a great time to buy. You can see the price broke out at around $2.40 and rose to $2.60, 20-cent rise. You know, that's pretty good. That's pretty good. If you wanted to make a good swing trade, what was that, like 8 or 9%? It's really good. So I watched and waited until we got confirmation to break out above this triple bottom, which is right here at $2.58. And entering at that level was perilous because the price then broke down. So yes, I've been holding through this. And you can see this measure move down here. 1, 2, and then 3. And what we see now is a touch of that retracement, the 61.8% level at $2.15, which is the level of the triple bottom. So if this triple bottom is just the first half of a double bottom, I wouldn't be surprised at all. And I think that we could see a lot of potential upside in Genprex. It's a pretty small market cap. I believe it was like $108 million, and there aren't a whole bunch of shares, 47 million. I mean, yeah. The short interest per Fintel was 5%, which is good. You know, high short interest is really bearish, especially when the price is at relative highs. So to see the price make this big move up, to see low short interest, good strong support at these Fibonacci retracements, I'm bullish on Genprex. So this is my first buy and hold. I hope it goes well. Well, it's not my first buy and hold. I guess, you know, AMC and GameStop are my first buy and hold, but that's not the case. Not with AMC, at least. Okay, so that's where I'm at this week. I did come up with some new trading rules, and I did this to help discipline my trading, because my trading isn't the best, right? My analysis is good, but my trading's wanting. A little lacking, so I came up with this, and I call it the code. And these are my personal guidelines for trading. First thing, trades must not be placed out of conviction or emotional volition of any kind. And that is so important. If you're in the market to make money, you're not going to make the money doing what feels right, because logic, numbers don't care about how you feel. I don't know. This has just been my experience. Margin is prohibited. I'm not going to trade on margin. I've transferred my account back into cash, of course. Which makes some account management needed. I need to make sure that I have enough funds to trade and enough liquidity to always take an opportunity, but also to protect myself. I need to make sure I'm managing my losses, right? So no position shall exceed 1/4 of the overall value of the account, and there are a couple of exceptions, you know, for cash, or if you're running like an iron condor, which I didn't know that the option strategy I was describing in my earlier videos was an iron condor, because again, I'm not very educated in trading, right? I just said, hey, this makes sense to me. So yeah, thank you for telling me that. I believe that was Red Approves. I can't quite remember. Okay, so also, I'm going to be okay with holding positions that I've appreciated since opening. Like, if Genprex goes to like $10 and it suddenly is more than 1/4 of my account, like, that's fine. I'll hold it. Now, I have to make sure I have funds available for trading, so I'm going to have 1/2 of the account value cleared and available for each day. So I'm going to have to clear the board at least half if I'm trading options at the end of each day, and that makes sense. I see surges of volume at the end of the trading day, and I think that's why I think that this is pretty normal, is to make sure you have enough available funds to trade. And then I go into open positions. Must be held long or deep in the money derivatives. That's it. If I'm holding a short-term options contract, it's gotta go. I'm not gonna be holding that. Now there are some exceptions for that as well, right? So if I have a really good like put contract and I want to hold it, I'm going to be okay with that, as long as it's not 1/2 of the value of the position at the end of the trading day. So last Thursday I was holding some $19 puts and they had appreciated a lot, and so I sold 3/4 of them, and then I held the rest over, and that way I still had taken profits from the trade. This is just a strategy to turn over some of that profit without having to go through clearing. So I held those contracts, and on Friday morning we saw a big dump, and then I sold, and I was able to maximize the profits that way. I thought that was a great way to play those puts in AMC. So let's see here. I also have some exceptions for positions opened with 100% acceptable loss, like, hey, I'm gonna buy some $7 puts with this $20 because, you know, I can lose the $20 and not cry, and I really think there is a chance of us hitting 7, but I don't want to put too much money on it. I'm okay with losing this $20, buy those $7 puts. Let's see here. Positions that cannot be closed, because that's going to happen. You know, if a contract goes down to 1/2 cent, you can't sell it. Now the goal here is to limit losses to 20% of the initial investment, or to implement hedges. Stops can be utilized but not required. I don't know. Stops frustrate me so much. And the exception here would be for buy and hold positions. If you're buying and holding, you might have to buy and hold through a vertical drop. Bukowski covers that in his online article about vertical run down. He says, hey, buy and hold investors, this thing is going to plummet, and you're just going to have to hold it. Let's see. So when trading trend lines, observe the following. And the first thing I do is I quote Bukowski's book and his 1, 2, 3 trend change method in getting started in chart patterns. Because honestly, it's just, I don't know why anyone would do anything but stick with what's tried true. Now, there's some other points here. When trading derivative securities during periods of falling implied volatility, trade intrinsic value. Because as implied volatility drops, the extrinsic value of an options contract decreases as well, if it's out of the money. Because the chances of the price reaching that price, that strike price, decrease. So that's why I have that up there. And to trade intrinsic value, you're going to have to buy deep in the money. All right. And I think I go into what I consider deep in the money up here. Deep in the money is defined by lowest available delta and theta value within an options chain on any given expiry. That way, that basically is us expressing that, you know, these contracts are very safe. So that's how you trade the intrinsic value. The next point says when trading derivative securities during periods of rising implied volatility, trade extrinsic value, and that would be out of the money. And that's where you're going to see the most appreciation of your asset or of your investment, is in extrinsic value. So this is how I'm doing my options trades. And then my last rule here is to not trade around the open and close, because it's just too volatile. You have to know what's going on. And I'm going to be really honest with you, my trading is something akin to those little fish that follow sharks, you know, and then they clean up after the shark and they clean the shark's skin. Like I'm more like one of those fish than the shark, right? Somebody else, some other whatever whales are pushing prices around, and I'm just here to kind of like, you know, ride along and pick up a little nugget here and there. So I gotta give the sharks, the whales, the space to push things first, and then I can come in and go, okay, I'm gonna just follow here and pick up a little scrap here and there and there. So that's why I've come up with that rule. So hopefully in following these rules, I will be able to limit my losses and maximize my gains. I'm really excited about Genprex. I'm really bearish on AMC. I know. And that's what I have for today's video.